Thank you very much, folks, for coming to our website. Today we have Patrick Jolliffe, President and CEO of Jolliffe Capital, Inc., a registered investment advisory firm located here in the Colorado metro area. And today Patrick is going to discuss with you who Jolliffe Capital is and how we help our clients and how we differentiate ourselves in today's market environment. Patrick?
Thanks, Sean. Sure appreciate it. And thanks to you all for taking the time to watch this video today. Jolliffe Capital is a registered investment advisory firm. We've been around since 2006. We are registered with the Securities and Exchange Commission. And the primary services that we provide is managing investments for our clients on a fee-only basis. And I wanted to talk to you just a little bit about why I think our company is different. And first and foremost, most importantly, is that Jolliffe Capital and all of our representatives are considered a fiduciary. So what that means basically in simple terms is that we are held accountable by law to put your best interests first. Okay, and believe it or not, there's a lot of folks in our industry that are not held accountable to a fiduciary status, and so that's very important to you whether or not we work together or not. My suggestion to you would be, all of us here at Jolliffe Capital would say, if you have the option, why not work with a fiduciary? Okay, I'm also an accredited investment fiduciary, so that helps in the fact that we study these kinds of things. We're accountable to continuing education and so forth. I'm also a certified financial planner practitioner and sign off on all of the financial planning that we do here through the firm for our clients, and finally a chartered financial consultant. So we, among our other staff as well, are credentialed folks. We have a PhD in economics who sits and serves contractually as our chief investment strategist. We have a chief certified investment management analyst. We have 2 chartered financial analysts that also help us when we are looking at the types of investments that we wish to utilize for our clients. And what we specialize in there is putting together a specific strategy for each of our clients, who then invest money at one of our custodians, and we use either Charles Schwab or TD Ameritrade, and then we are given limited power of attorney to be able to go in and trade those accounts strictly based upon what our clients want us to do. So furthermore, we are a fee-only firm, okay? So what I mean by that is we are not compensated on commission. We feel that it's important to be fee-only when we're managing money for our clients because it puts us with the same perspective and the same goal on the same side of the table. In other words, let's say we're charging 1% per year of the value of your investment. Well, if the value of the investment goes up, then our compensation goes up and the value of your investment goes up, and so we're both happy together. If the value of the investment goes down, consequently our fee goes down, we're not happy and you're not happy either. The difference between fee only and commission is that when we sell something in a client's account, we're selling something because we feel what we're buying or replacing it with is going to make that account grow faster. That's the idea. Conversely, if we're going to get paid on commission, it wouldn't necessarily matter because we would be paid on the transaction. So we have no incentive to trade in accounts other than to make them go and grow.
Now, Patrick, have we ever had an accountant contact us on behalf of one of their clients and seen excessive trade tickets involved with their retirement accounts and kind of wanting an explanation with that?
Oh, we've had various different questions come along those lines and helping people understand not only what's going on in a brokerage account to that extent, but also understanding some other investment vehicles just as simply as mutual funds. You know, they're not simple, and there's a lot of people that don't understand how the mutual fund industry works. But that's a good point that you bring up, and we're always dialed into, as a fiduciary, a big part of what we do obviously is we're trying to create value for the client, but a part of that is controlling the fee structure. And so through the Fiduciary Institute, we screen, we look at a lot of different types of investments, and it's incumbent upon us in working for you to find the very best, most cost-effective investment solutions that we can. So the fee only is a big deal. We also calculate what I refer to as your personal benchmark rate of return. Okay? Here's what I mean by that. Most people will take their investments and they'll match it against a certain benchmark out in the marketplace, whatever the S&P did or whatever the NASDAQ did and so forth. What we feel is most important, what's really only important, is what your money needs to do for you to get you from today until the end of your life. All right? And we have ways that we compute that for our clients, sort of back into the scenario to say, if we have this much money coming from a pension, we have this much money coming from Social Security, and we have this much money that's invested, and you've told us that you need X dollars per month to live on, then we're going to be able to figure out how much pressure we're going to have to put on your investment portfolio, and that's going to translate into your personal benchmark rate of return. So it's much more meaningful then when we meet with you and we're talking about the rate of return on your assets. If your personal benchmark rate of return is, I'll just use a hypothetical, 6% per year, and we're getting you 7% per year net after expenses, but yet the market was up 10%, nobody's going to be unhappy because we know that we were shooting for the 6% target and we exceeded that. So everybody has a different personal benchmark rate of return. We provide our own report card to our clients every 3 months, so you always know exactly how we're doing for you.
So Patrick, really what that means and what you need to understand as you're viewing this is that there is no reason to take excess risk in your portfolio if all you need to make is 6% to maintain your lifestyle, correct?
That's right. That's exactly right. And I think a good way to think about that is, let's say we calculate your personal benchmark rate of return to be 0. That means you have enough money to get from where you are today all the way until the day you pass away, and you could literally dig a hole in the backyard and just dump it in there. It doesn't have to grow at all. Okay, so we don't generally see that type of a scenario, but for everyone we work, for whom we work, we customize a plan because it's important to us as it is to you to know that we have a target that we're shooting at and something that we're trying together to reach so that we can be fairly measured on both sides of that. So that's an important thing to understand. And I also wanted to make sure that you understand who we work for. There's one person in this world that tells us what to do, and that's you. We're a truly independent firm. Sean and I own this company. We work for you specifically. There's no big building back in New York City or anything else that's telling us what to sell or hoping that we can do this to make it to Hawaii or anything else. You hire us and you fire us just like you would any other consultant. And you have the fiduciary protection that I talked about earlier for both of us to know that we're going to do everything that we can to help you achieve your retirement goals and income and everything that's in your best interest.
So folks, this is probably some of the most important information and education that you can get today when trying to choose a registered investment advisor and what separates us from, say, for example, a person at A.G. Edwards or XYZ down the street, someone that's working at Vanguard. We're going to be able to personally customize a retirement plan for you. And Patrick, I know that we have this free report right here that we will send to anybody who is viewing this. All you need to do is either contact our office at 303-469-6273, or you can also send us an email at pat@jolliffecapital.com, and we'll be able to get this information to you. This is a great little packet. It goes through all of the various things that Patrick just discussed. It also has our Form ADV in there, and it is great information that gives you everything that you need to make an informed decision. Once again, thank you very much for viewing this video, and we certainly hope that your retirement will be prosperous in the years to come. Thank you.